Hi, and welcome to Sanford's Software and Internet Monthly Market Report for October 2023. As usual, we're going to be reviewing the previous month's M&A and venture capital activity across the entire software landscape. So let's dive in on the M&A front. In October 2023, we saw $85 billion of dollars invested across 104 transactions, all done at a median revenue multiple of 5.9 times. The rising deal value does mark a slight sign of optimism, but most of this improvement actually came from two transactions. The first was the Activision Microsoft $75 billion mega deal that was pending regulatory approval for over a year. And then the second one was the National Instruments Emerson Electric deal, which was done for $8.2 billion. Outside of these two transactions, October had another 6 deals over 100 million, 3 of which are highlighted on this slide. Now, moving on to yearly deal volume and dollars invested. As expected, 2023 continues to track considerably below 2022 figures, although the bump from the Activision Microsoft deal does minimize this year-over-year decline a little bit. Deal volume's tracking down right now to be 26% less than what it was in 2022, while dollars invested is tracking down about 34%. So then moving on to median multiples, although less representative given a limited sample size for Q4 2023, the median revenue multiple did increase slightly relative to last quarter. This, coupled with a very tight range between the 75th and the 25th percentiles, does suggest there is high competition for quality assets being marketed right now, and valuation ranges are staying tight for these types of software assets. And then moving on to SaaS versus non-SaaS. So these multiples continue to remain tight in 2023. The steady decline in valuations can be attributed to the rising interest rates and just heightened sense of macro uncertainty. We've got obviously the war in Ukraine. Now we've got a new front opening up in Palestine and Israel. As several influential global central banks have maintained rates in October and November and signaled a potential rate cut in late 2024, investors may begin to see the light at the end of the tunnel. With that said, though, we don't expect a material rebound in multiples until after some of these events play out over the next 12 months. And then moving on to deal volume, we saw here that deal volume jumped slightly in October, which was the highest amount recorded since January 2023. This gives us some level of optimism, but we don't think we're out of the rough waters yet. We'll have to see how the next few months shape up to really draw some trends, although it is a positive sign, the monthly deal volume that we did see in October. And then switching gears to the venture capital side of things now, let's take a look at how October 2023 did from an investment perspective. We saw 4.5 billion of invested capital for the month, a median deal size of 3.2 million, and 433 VC transactions. Aside from the $1.7 billion financing of Metropolis, the total capital invested for the month was distributed over several investments, including 12 deals over 50 million and another 20 deals above 25 million. And then looking at monthly deal volume, VC deal volume did jump slightly in October like it did with M&A and recorded its highest amount since May 2023. Despite this, though, the 433 deals we saw in October is still far below the 2022 average of 732 deals per month. And then moving on to yearly deal volume and dollars invested, again, no surprise here as 2023 continues to track considerably below 2022 figures. Deal volume's tracking down to be about 21% less, while dollars invested is tracking down about 28% less. And now on to the last point with respect to VC deal activity and valuations. So far in 2023, we've seen VC valuations across all deal stages declining when compared to 2022. Mid-stage valuations definitely were hit the hardest, declining 53% year over year, while early and late stage valuations experienced more modest declines. So that's a wrap for this month's Software and Internet Report. As always, thanks again for listening.